I want to show you guys how I use SMT to trade. So I took this trade about 2 days ago, and yeah, let's get into it. So this was the execution. I made two trades on the 1 minute time frame. This was the first one, this one was the second one. But let's get down to the first step, which is high time frame bias. So on that day itself, I was looking for shorts because high time frame was bearish. So let's get down into the high time frame, and we can see that why I chose bearish. So we can see here since the 11th of May, I took a trade here. That was a W, but that's not relevant. We want to focus on the 12th of May. We can see high time frame bias was clearly bearish because Asia session price actually came down, created a bearish 1 hour fair value gap, which price didn't go back to revisit. And during the European session, price created another 1 hour fair value gap, which price actually came back to test it and respected it at 9 a.m. Eastern Standard Time. So I normally start trading at 9:30. So this was enough indication for me to tell me that price is respecting this bearish hourly fair value gap. Hence, price is looking to go down more towards the downside. I'm aiming for sell side liquidity that was previously created, in the past couple days. So that's high time frame bias done, bearish. So we go down to the 5 minute time frame. So this video I wanted to talk to you guys a little bit about SMT, so smart money technique. So SMT is basically another confluence tool that you can put in your trading arsenal. So SMT helps when, if let's say a specific, let's say I'm trading NQ and you're using ES as a, it's a correlated, basically these two are correlated. So if, let's say, ES takes a specific liquidity level and NQ hasn't, you can use that SMT as a confluence tool. So I'll show you what I'll show you what I mean. So let's look here. These are the two of the same days. So 12th of May 9:30, 12th of May 9:30. We can see our price created a 5 minute fair value gap, right? So at about 10 o'clock and 10:05, you can see ES actually came up, swept this mini buy side liquidity here into the 5 minute fair value gap and actually closed below that 5 minute fair value gap. So it swept, created a wick and come back down, and we can see NQ here, the same time candle as ES. You can see NQ didn't do that. So it created a 5 minute fair value gap here, but it didn't sweep. So when price sweeps this high, normally most of the time when it sweeps the high, it means that price actually took out stop losses or any pending orders here, sweeping the buy side liquidity with the intention of moving towards the downside. And there was a sell side liquidity that was put in here at 7373 for ES, and sell side liquidity that was put in here at 29,008. So I took a trade here a little bit hastily. You can see here it swept. So I was looking for price to make a downward move towards the sell side liquidity. It didn't, because basically that's what I look for. If price wants to go down, it will sweep buy side liquidity first before coming down, and if it wants to go up, it will sweep sell side liquidity before going up. So if you go down to the 1 hour time frame, you can see as well. Now this line that's slightly curved, not curved, but it's not straight. It's sort of like a trend line. This indicates that the SMT happened during this time. We can see here, as soon as price took out this high here, I actually executed a trade, which I actually entered a little bit hastily, which I immediately closed when I saw a lot of bullish movement for ES, just to cut my losses, because there was actually no entry model for me. I was just using the SMT to execute, but in hindsight, I actually didn't really follow my trading rules, so I quickly closed it. Had a little bit of a small little loss there, but that's fine. I learned my lesson, so I just waited and waited. About 10:20, this was when the my trading model actually appeared. So you can see here, my trading model for lower time frame is that I look for a lower time frame turtle soup, a lower time frame inverse fair value gap, and also a risk to reward of 1-to-1, and I need opposing liquidity level. So we can see here on my second trade, I was a little bit more patient. That happened at around, I would say, 10:27 and it was a 3-minute hold for this trade, but relatively quick because, like I said, price already respected that 5-minute fair value gap on this 5-minute. Like I showed you guys, see, like it swept price even though it went up, but the trend was actually going down, so price actually came up to grab more liquidity. In the end, you can see here this 5-minute fair value gap, although it was immediately sort of broken through, it actually came back down with a lot of displacement. And on the lower time frame, you can see as well, there was a turtle soup here, right? Manipulation towards the upside. Price came back down. There was 2 1-minute inverse fair value gap that was created. I should say. So here there's one. Here there's another one. Actually, here there's another one which I didn't annotate, but because these ones are clear enough for me to take a trade. So first criteria, turtle soup. Second criteria, 1-minute inverse fair value gap created. Displacement towards the downside. I have opposing liquidity that was here, 29,008, and a risk to reward of 1-to-1. So when I took the trade here, my stop loss was actually around here, turtle soup. So if you can see, I don't have the tool here, but it's almost 1-to-1, close to 1-to-1. With my bias intact, I took another trade. This was basically the 2 trades I took for that day. And yeah, so this one ended up with a good W, erasing the loss that I had here initially. But yeah, overall good lesson, because I was a bit hasty in this trade because I saw the SMT, but the second trade was a good one. So yeah, so basically today was a little bit different. There's an SMT involved, but I hope you guys found this video helpful. Drop a comment below if you have any questions. Happy to help out you guys that are looking to find your own strategy. This is the strategy that I use every single day. I look for this model every single day when I come into the market. So yeah, thanks for watching. I'll catch you guys in the next one.